Hi, welcome to this video today. It is the 28th of September, it's Saturday. Just give our update outlook for crude oil, and we will go to the charts in a moment. Now, last week we did a video on crude. We were saying, the spike in relation to the attack on the Saudi oil fields would not be sustained and it would retrace. Now, we did have the biggest spike in crude oil history, about 10%, and we retraced the whole big candle after the event. Now, we're just a little bit above the bottom of the candle at the moment. But in terms of crude oil, from here, a lot of downside potential. Basically, we think crude oil could decline by as much as 40% in value and go down to the 33 level in the coming months. So if you're a position trader, just a small position short crude could yield really great returns. We really like the risk to reward of crude oil shorts. Now, what we are going to do is we are going to go to the chart, but just please do keep in mind before I do my analysis, it's my view as of this moment in time. It can of course change in line with the market conditions. If you want all our trading techniques, daily technical analysis of 14 major forex pairs and selected commodities, you can click on the link beneath this video and get live access to our member centre. Right, let's take a look at the chart. Right, crude oil monthly chart just very quickly before we go to the daily chart. See the big picture. You can also see our target, which is here, 33. Why have we picked this level? Because the supply and demand fundamentals now are way more bearish than they were here. I wouldn't even be surprised to see us overrun and go below 30. It's that bearish for crude in our view. Now, if we take the last 6 months, to get above 60 here, then a big red comes down. We're trying to get back through the 60 level. Obviously, this candle, bit of an aberration, and it fails. So, yeah, 60 is a big level. Another level in between, which I'll come to on the daily chart. Sorry, that's my trajectory. Then you've got these two blue bodies. Get up, slice, all the attempts, basically. 60. Yeah, if we closed above 60, that would negate our bearish view. But I do not think that is going to happen. Just crude set for way lower prices. So let's go to the daily chart, look at the big fundamentals and sentiment behind the chart, and draw our levels. Right, daily chart of crude, we'll do our levels in a moment. First of all, fundamentals and sentiment. Demand. Global demand is slowing because global economic growth is the slowest since the 2008 financial crisis. Okay. Now, in terms of global economy, big slow up, and that slow up is accelerating. When I gave my target on the monthly chart, that was 2013. Global economy doing much better then than now. Okay. So big slow up in demand. China obviously in big trouble. It's the world's biggest crude importer. So demand slowing and will continue to slow. Supply and overabundance of crude oil. Main reason is if you look back since 2008, the US has doubled its production. It's now the world's biggest producer and an exporter. And this month, major pipelines opened to the Gulf of Mexico from the US interior. The US has had problems getting the amount of crude they've got out into the world market. That now is going to speed up. So the pipelines will help the US flood the global market with even more crude. Okay. So vast oversupply. In terms of, market makes a lot about Iran. They say it's out of the equation because of US sanctions. Iran is still selling crude to China, still in the market. So that's not really out of the equation in terms of supply. Okay, Venezuela, big drop in production there. But, it's more than compensated by the US and other non-OPEC producers who are pumping a lot of oil. So slowing demand, vast oversupply. Okay. Now, in terms of point number 4, I'm going to do it before point number 3 because it's important. 75% of volatility in crude is caused by speculators. Take speculators out of this chart and it would hardly move. Okay. Now, in terms of speculators, they tend to buy crude oil as a proxy trade to stock market strength. Why? The logic behind it is that basically if stocks are pretty firm, things are good in the global economy, and crude is bought as a proxy to stock market strength. The stock markets have been pretty firm. Okay, they're moving a bit sideways now. It's totally illogical, but that is what happens. Okay. Um, our own view is stocks vastly overvalued against the global economic picture, so to speak, and should come down. That will weigh on crude. And in terms of large funds, let's look at how long they are in terms of crude oil and WTI. 422,000 contracts on the latest COT net traders positions against, a bearish supply and demand backdrop. 422,000 contracts. That's 1,000 barrels a contract, isn't it? So what's that? 4.2 billion. I hope I've done my maths right, but it's a huge figure held by speculators. Look historically when specs hold between 400 and 500k in terms of long positions, you tend to find you get big breaks to the downside as they're taken out on stop. It's just a rough guide, but from my experience, the COT back to 87, you got 4 to 500k in terms of longs. You can be looking for a big move to the downside, and I think that is what we're going to get. Obviously, now let's move to the chart. Here is the big spike, 14% from top to bottom. We were saying, we felt the market when it opened. We were obviously doing the video at the weekend when the strikes occurred. We would not take out that level. That was kind of our level in the sand. Touches it. This tail can't get through that tail down. Retrace the whole candle, just a little bit of a bounce. Okay, so in terms of this spike here, we were saying last, just panic and anticipation of spike of things that probably were not going to happen. It's all very dramatic. When you see the headlines, 5% of global oil supply is taken out. Well, how much supply is in reserve? A lot. Okay, that 5%, not really that big a deal. Obviously, people say, how long will it take Saudis to repair the oil installations? It could take a long time. No. Look at a war. How quickly do they repair oil installations? Pretty quickly. Saudis are back nearly to full production. It didn't matter even if they weren't, in our view. Crude has got limited upside. Then there's people, talking about a war between the US and Iran, anticipating something that probably wasn't going to happen. And when you see the big spike, it's 14%. It's big, and everyone who wants to buy comes in together. Okay, and then there's no more buying. Little poke up to try and take that tail, big red. It's over, down to the bottom of the candle, a little bounce off. Okay, so trading price spikes can be pretty lucrative. Okay, didn't take long for the 14% up to be reversed. Now, in terms of going forward, our view is that crude, obviously, a great long-term sell. I think, 60 is going to be a hard level to take out now. We saw that on the monthly chart. So that's the level behind which we've got our stop. You've got another one in between. It's there. So you can see why I've done that. It's about 58, isn't it? Body tries to hold, tail tries to hold. We do hold for a bit, then the big red, and now we're trying to get back. But that level is first level resistance. I think we're a sell back towards there. Stop behind 60, or we just take any red on the downside. Okay, when she opens up next week. Obviously, we're looking for monthly support, but obviously, I expect this level to be tested and broken pretty quickly. So sell back to this first level resistance or any weakness next week. Stop behind the 60 level. The only chance for me of crude really going significantly higher is a massive increase in tensions in the Middle East, or threat of a war or whatever. But for us, we don't think that's likely. Of course, it could occur, but everything in terms of supply and demand picture points to lower crude prices, and also the way traders are positioned with specs heavily long points to far lower prices. So crude oil, very, very bearish. We'll see what happens. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.